Question 1. Which of the following best describes the concept of adverse selection in the context of insurance? A. A situation where insurers offer lower premiums to attract high-risk applicants. B. The practice of charging higher premiums to applicants who are more likely to file claims. C. The tendency for individuals with higher risks to be more likely to seek insurance coverage than those with average or lower risks. D. A method of pooling risks to ensure equitable premium distribution among policyholders. Correct answer. C. The tendency for individuals with higher risks to be more likely to seek insurance coverage than those with average or lower risks. Explanation. Adverse selection occurs when individuals who perceive themselves to be at higher risk are more inclined to purchase insurance than those who are at lower risk. This can create an imbalance in the insurer's risk pool, potentially leading to higher claims and financial challenges for the insurer. To counter this, insurers use underwriting practices to evaluate and price risks appropriately. The New York Department of Financial Services emphasizes fair underwriting to ensure insurers maintain solvency without discriminatory practices. Question 2. In a commercial property insurance policy, what is the purpose of a value reporting form endorsement? A. To automatically increase the coverage limits in line with inflation. B. To allow the policyholder to adjust coverage to match fluctuating inventory values over time. C. To limit the insurer's liability to a fixed value specified at policy inception. D. To specify additional insureds that are covered under the policy. Correct answer. B. To allow the policyholder to adjust coverage to match fluctuating inventory values over time. Explanation. A value reporting form endorsement enables businesses with variable inventory or property values to adjust their coverage throughout the policy period. This ensures that the policyholder is neither overinsured nor underinsured, as they report their values periodically to the insurer. In New York, insurance regulations encourage accurate and transparent reporting to ensure claims can be settled fairly and equitably, in line with state-mandated standards for financial responsibility and consumer protection. Question 3. Scenario. Lisa owns a small cafe in New York. One day, a fire breaks out, causing significant damage to the building and equipment. When she submits a claim, the insurance company sends an adjuster who offers a settlement that is much lower than Lisa expected, citing depreciation. Lisa disagrees and wants to contest this valuation. What should be Lisa's next step under New York claims handling regulations? A. Accept the adjuster's offer and proceed with the repairs to avoid delays. B. Request an appraisal, as allowed under her policy, to dispute the valuation and reach a fair settlement. C. File a complaint with the New York Department of Financial Services to force the insurer to pay a higher amount. D. Initiate legal action against the insurance company immediately. Correct answer. B. Request an appraisal, as allowed under her policy, to dispute the valuation and reach a fair settlement. Explanation. New York insurance policies often include an appraisal clause, allowing the insured and insurer to appoint independent appraisers to determine the value of the loss when there is a disagreement. This process is an effective dispute resolution method before taking more drastic measures, such as legal action. The New York Department of Financial Services requires insurers to follow fair claims practices, including providing policyholders the opportunity to contest valuations through the proper channels before litigation is pursued. Question 4. What is the primary purpose of the coinsurance clause in property insurance policies? A. To ensure that the insurer provides full replacement cost coverage without depreciation. B. To require the insured to carry insurance equal to a specified percentage of the property's value to receive full claim payment. C. To limit the insurer's liability to a predetermined amount in the event of total loss. D. To provide coverage only for specific named perils. Correct answer. B. To require the insured to carry insurance equal to a specified percentage of the property's value to receive full claim payment. Explanation. The coinsurance clause obligates policyholders to insure their property to a specified percentage, typically 80%, 90%, or 100% of its value. If the insured fails to meet this requirement, partial penalties may apply, resulting in a lower claim payout. This clause encourages adequate insurance coverage and reduces the risk of underinsurance. In New York, coinsurance clauses must be clearly stated in the policy to prevent ambiguity and ensure policyholders understand their obligations. Source: New York Insurance Law SS 3404. Question 5. Which of the following is true regarding umbrella and excess liability insurance? A. Umbrella policies provide coverage only after the limits of the primary policy have been exhausted, without any additional coverage. B. Excess liability policies provide broader coverage than umbrella policies. C. Umbrella policies may offer broader coverage that supplements primary liability policies, while excess liability simply extends the limits of primary coverage. D. Excess liability policies cover additional risks that primary policies do not. Correct answer. C. Umbrella policies may offer broader coverage that supplements primary liability policies, while excess liability simply extends the limits of primary coverage. Explanation. Umbrella insurance provides an additional layer of coverage that not only extends the liability limits of primary insurance policies but can also offer broader protection for other incidents not covered by the primary policy. Excess liability insurance, however, strictly increases the limits of existing coverage without adding extra types of coverage. New York regulations mandate that insurers properly explain the scope and limitations of such policies to ensure consumers understand the differences. Source: New York Insurance Regulation Part 60. Question 6. Scenario: Jonathan owns a boutique hotel in New York City. A severe storm causes significant damage to the roof and interior. Jonathan files a claim with his commercial property insurer, but the insurer denies the claim, citing an exclusion for certain natural disasters. Jonathan believes this is incorrect. What is Jonathan's most appropriate first step under New York law? A. File a lawsuit against the insurance company. B. Contact an independent insurance adjuster to assess the damage. C. Request a detailed explanation of the denial in writing from the insurer. D. Accept the denial and seek government aid for repairs. Correct answer. C. Request a detailed explanation of the denial in writing from the insurer. Explanation. Under New York insurance regulations, insurers must provide a clear written explanation when denying claims, outlining the specific policy provisions that justify the denial. Jonathan's first step should be to request this explanation to better understand the basis for the denial and determine whether it aligns with his policy terms. This transparency helps maintain fairness and compliance with New York's Consumer Protection Standards. Source: New York Insurance Law SS 2601. Question 7. Which of the following describes indemnity in the context of insurance? A. The principle that an insured must prove negligence to receive a payout. B. The concept that insurance policies compensate insureds to make them whole again without profiting from a loss. C. A clause that allows insurers to take ownership of damaged property after a payout. D. The provision that allows the insurer to deny coverage if premiums are not paid on time. Correct answer. B. The concept that insurance policies compensate insureds to make them whole again without profiting from a loss. Explanation. Indemnity is a fundamental principle of insurance that ensures the policyholder receives compensation only to the extent of their loss, preventing any financial gain. This concept supports fairness in claims settlements and is central to property and casualty insurance practices in New York, maintaining balance in risk sharing without incentivizing intentional losses. Source: Insurance Principle of Indemnity. Question 8. In New York, which of the following is considered an unfair trade practice for insurance agents? A. Comparing different policy benefits for a client. B. Offering a client a rebate to induce the purchase of a policy. C. Discussing policy exclusions with potential customers. D. Advising a client to switch policies if it benefits them financially. Correct answer. B. Offering a client a rebate to induce the purchase of a policy. Explanation. Rebating is an illegal practice under New York insurance law, where an agent offers any part of their commission or other benefits to a client as an incentive to purchase a policy. This is considered an unfair trade practice as it can create an imbalance in the marketplace and unfairly influence consumers' decisions. Source: New York Insurance Law SS 2324. Question 9. What distinguishes actual cash value, ACV, from replacement cost in property insurance? A. ACV covers the full cost to replace damaged property, while replacement cost considers depreciation. B. ACV takes depreciation into account when valuing a loss, whereas replacement cost does not. C. Replacement cost only covers partial damage, while ACV applies to total losses. D. Replacement cost considers the original purchase price of the property, whereas ACV does not. Correct answer. B. ACV takes depreciation into account when valuing a loss, whereas replacement cost does not. Explanation. Actual cash value, ACV, is calculated by subtracting depreciation from the replacement cost of the property, ensuring that the policyholder is compensated for the item's current value rather than its full replacement cost. In contrast, replacement cost coverage pays the full cost to replace damaged property without considering depreciation. This distinction is essential in New York property insurance claims, influencing the amount the insured receives. Source: NY Property Insurance Valuation Guidelines. Question 10. Scenario: Maria is a licensed insurance producer in New York and is approached by a new client seeking comprehensive homeowners insurance. During the discussion, Maria promises the client that she can guarantee premium rates will never increase. What potential issue arises from Maria's statement? A. There is no issue. Agents are allowed to promise future rates if backed by their agency. B. Maria could be accused of misrepresentation, which is prohibited under New York insurance law. C. Maria's promise is valid as long as it is part of a written contract with the client. D. The statement is only problematic if Maria does not have the client sign a waiver. Correct answer. B. Maria could be accused of misrepresentation, which is prohibited under New York insurance law. Explanation. Misrepresentation involves providing false or misleading information to clients. In New York, it is prohibited for producers to make promises or guarantees about future rates that cannot be supported, as this misleads clients and distorts their understanding of the policy. Violating this regulation could result in fines or a loss of licensure. Source: New York Insurance Law SS 2123. Question 11. What is the purpose of a declaration page in an insurance policy? A. To outline the insurer's obligations in case of claim disputes. B. To summarize the insured's coverage, including policyholder details and coverage limits. C. To provide information on past claims filed by the insured. D. To explain the legal terms and conditions of the policy in detail. Correct answer. B. To summarize the insured's coverage, including policyholder details and coverage limits. Explanation. The declaration page, often found at the beginning of an insurance policy, provides a summary of essential information such as the insured's name, address, policy number, coverage limits, and premium details. This page helps the policyholder quickly reference their coverage details. In New York, insurers are required to issue clear and accessible declaration pages as part of the policy package. Source: NY Insurance Policy Format Standards. Question 12. In New York, twisting refers to which of the following unethical practices? A. Misrepresenting the benefits of a policy to persuade a client not to file a claim. B. Offering discounts or rebates not specified in the insurance policy. C. Convincing a policyholder to cancel their current insurance and purchase a new policy through misleading comparisons. D. Engaging in collusion with other agents to set policy prices. Correct answer. C. Convincing a policyholder to cancel their current insurance and purchase a new policy through misleading comparisons. Explanation. Twisting is an unethical practice where an agent misrepresents or manipulates information to persuade a client to replace an existing insurance policy with a new one, which often does not provide a significant benefit to the client. New York law prohibits twisting to protect consumers from unnecessary or financially disadvantageous policy changes. Source: New York Insurance Law SS 2123. Question 13. A waiver of premium rider in an insurance policy means A. The policyholder is exempt from paying premiums under certain conditions, such as disability. B. The policy automatically terminates if premiums are not paid on time. C. The insurer waives the policy's deductible after a claim is filed. D. The insured can opt out of certain coverage features to reduce premiums. Correct answer. A. The policyholder is exempt from paying premiums under certain conditions, such as disability. Explanation. A waiver of premium rider ensures that if the insured becomes disabled or meets other specified conditions, the insurer will waive future premium payments without canceling the policy. This rider is commonly found in life and long-term disability insurance policies to offer financial protection to the policyholder during difficult times. Source: NY Insurance Code on Policy Riders. Question 14. Which type of policy would be most suitable for a business in New York looking to protect itself against claims of negligence and third-party bodily injury? A. Business interruption insurance. B. Property insurance. C. Commercial general liability CGL insurance. D. Workers' compensation insurance. Correct answer: C. Commercial general liability CGL insurance. Explanation: a commercial general liability CGL insurance policy covers businesses for third-party claims related to bodily injury, property damage, and advertising injury due to negligence. It is essential for businesses that interact with clients or the public to reduce liability exposure. This coverage is a standard requirement for businesses operating in New York to mitigate risk. Source: NY Business Insurance Requirements. Question 15. An insurance company uses reinsurance for which primary reason? A. To lower the premium rates for policyholders. B. To reduce the company's risk by sharing potential losses with other insurers. C. To increase the marketing of their insurance products. D. To ensure a quicker claims settlement process. Correct answer: B. To reduce the company's risk by sharing potential losses with other insurers. Explanation: reinsurance is a method where an insurance company transfers part of its risk portfolio to other insurers to protect itself against large claims and financial instability. By sharing risks, the primary insurer can maintain financial stability and continue to offer coverage. In New York, regulations ensure that reinsurance agreements are documented properly and do not mislead policyholders. Source: NY Reinsurance Regulations. Question 16. What does the principle of subrogation in insurance allow an insurer to do? A. Transfer the insurance policy to another insurer at renewal. B. Recover the cost of a claim from a third party responsible for the loss after paying the insured. C. Cancel a policy if the insured fails to meet certain conditions. D. Increase the premium rates based on the insured's past claim history. Correct answer: B. Recover the cost of a claim from a third party responsible for the loss after paying the insured. Explanation: subrogation allows an insurance company to take on the legal right to seek reimbursement from a third party responsible for causing the loss after compensating the policyholder. This principle helps insurers minimize losses and maintain fairness in claims recovery. It is an important aspect in New York's insurance claim practices, ensuring that the ultimate responsibility lies with the liable party's. Source: NY Subrogation Laws. Question 17. Under New York law, an insurance policy becomes contestable within what time frame after it is issued? A. 30 days. B. 6 months. C. 1 year. D. 2 years. Correct answer: D. 2 years. Explanation: insurance policies are generally contestable for a period of 2 years from the date of issuance. During this period, the insurer can investigate and contest claims if it finds evidence of material misrepresentation or fraud in the policy application. After this period, the policy typically becomes incontestable, barring specific exceptions like non-payment of premiums. Source: New York Insurance Law SS 3203. Question 18. What is the purpose of a deductible in an insurance policy? A. To increase the total coverage amount available. B. To limit the policyholder's out-of-pocket expenses. C. To reduce moral hazard by requiring the insured to share a portion of the risk. D. To cover administrative costs for the insurer. Correct answer: C. To reduce moral hazard by requiring the insured to share a portion of the risk. Explanation: a deductible is the amount that the policyholder must pay out of pocket before the insurer pays a claim. This arrangement reduces moral hazard by ensuring the insured has a financial stake in preventing losses. Deductibles help manage risk and can affect the overall premium of the policy. Source: NY Insurance Policy Guidelines. Question 19. Which of the following best describes a mutual insurance company? A. An insurance company that is owned by shareholders and pays dividends to them. B. An insurance company owned by policyholders sharing profits in the form of dividends or reduced premiums. C. A state-run insurance entity that provides coverage for high-risk individuals. D. An insurance company that focuses exclusively on reinsurance services. Correct answer. B. An insurance company owned by policyholders sharing profits in the form of dividends or reduced premiums. Explanation. Mutual insurance companies are owned by their policyholders. Any profits generated are either distributed as dividends or used to reduce future premiums. This structure aligns the interests of the insurer and policyholders, emphasizing policyholder benefits over profit maximization source. NY Insurance Company Ownership Regulations. Question 20. A named peril policy will cover which of the following? A. Any loss unless explicitly excluded in the policy. B. Only the specific perils listed in the policy. C. Damage from all natural disasters, regardless of type. D. Losses involving negligence by the insured. Correct answer. B. Only the specific perils listed in the policy. Explanation. A named peril policy provides coverage only for the risks explicitly listed in the policy. If a peril is not named, the loss associated with it is not covered. This is different from a risk of open peril policy, which covers all perils except those specifically excluded. Source. NY Insurance Policy Types. Question 21. In New York, actual cash value, ACV, in an insurance policy is defined as A. The original cost of the insured item. B. The current market value minus any depreciation. C. The amount paid for a replacement item without any deduction for depreciation. D. The value stated by the policyholder at the time of policy issuance. Correct answer. B. The current market value minus any depreciation. Explanation. Actual cash value, ACV, refers to the amount an insurance policy will pay for an item, taking into account its depreciation. It represents the item's current value rather than its original or replacement cost. This valuation method ensures that the insured receives compensation reflecting the item's age and condition. Source. NY Insurance Valuation Methods. Question 22. What is the main purpose of an umbrella insurance policy? A. To cover high-value items like jewelry or collectibles. B. To provide coverage for medical expenses related to accidents. C. To offer additional liability protection beyond existing policy limits. D. To ensure full replacement cost coverage without depreciation. Correct answer. C. To offer additional liability protection beyond existing policy limits. Explanation. An umbrella insurance policy provides extra liability coverage that goes beyond the limits of the policyholder's home, auto, or other basic liability policies. It is designed to protect the insured from significant claims or lawsuits that could potentially exceed their primary policy limits. Source. NY Umbrella Insurance Overview. Question 23. In New York, uninsured motorist coverage is designed to protect A. The at-fault driver who caused an accident. B. Passengers in a commercial vehicle involved in an accident. C. The policyholder and passengers when involved in an accident with a driver who has no insurance. D. Any pedestrian hit by a vehicle, regardless of fault. Correct answer. C. The policyholder and passengers when involved in an accident with a driver who has no insurance. Explanation. Uninsured motorist coverage ensures that if the policyholder or their passengers are involved in an accident caused by an uninsured driver, their medical expenses and other damages will be covered. This type of coverage is mandated in New York to provide financial protection in such scenarios. Source. NY Auto Insurance Requirements. Question 24. Indemnity in the context of an insurance contract means A. Ensuring the insured receives a profit after a claim is paid. B. Compensating the insured to return them to their financial state before the loss. C. Covering only partial losses to encourage risk sharing. D. Allowing policyholders to transfer coverage to another person. Correct answer. B. Compensating the insured to return them to their financial state before the loss. Explanation. Indemnity is the fundamental principle in insurance that ensures policyholders receive compensation that places them in the same financial position as before their loss without allowing for profit. This concept is key to maintaining fairness and preventing moral hazard. Source: NY Insurance Definitions and Regulations. Question 25. The New York State Department of Financial Services, DFS, is responsible for A. Approving new insurance agents' licenses, B. Reviewing personal insurance claims for fraudulent activities, C. Regulating and overseeing insurance and financial services within the state, D. Setting federal guidelines for insurance companies operating nationwide. Correct answer: C. Regulating and overseeing insurance and financial services within the state. Explanation: the New York State Department of Financial Services, DFS, supervises and regulates financial products and services, including those of insurance companies. It ensures that industry practices are fair and transparent, protecting the interests of consumers and policyholders. Source: NY State DFS Mission Statement. Question 26. What is a grace period in the context of insurance policies? A. The period after the claim is settled where premiums are waived. B. The time frame in which the policyholder can renew a lapsed policy without penalty. C. The additional coverage offered during seasonal risk periods. D. The set time after premium due date during which the policy remains active without penalty. Correct answer: D. The set time after premium due date during which the policy remains active without penalty. Explanation: a grace period is the time following the premium due date during which the policyholder can make their payment without coverage lapsing. This period helps policyholders avoid the immediate consequences of non-payment, ensuring they maintain continuous coverage. Source: NY Insurance Payment Guidelines. Question 27. Loss assessment coverage is specifically useful for A. Protecting against personal liability claims, B. Covering damages to a policyholder's personal items within their vehicle, C. Sharing costs for damage or liability claims with a homeowners association, D. Reimbursing expenses for temporary housing after a covered loss. Correct answer: C. Sharing costs for damage or liability claims with a homeowners association, Explanation: loss assessment coverage helps policyholders who live in condominiums or communities governed by homeowners associations, HOAs. Covers a portion of shared expenses when the HOA imposes an assessment due to damage or liability that exceeds the association's insurance limits. Source: NY Condo Insurance FAQ. Question 28. What does a combined single limit, CSL, in an insurance policy mean? A. It combines all coverage types into one maximum payout per claim. B. It specifies separate limits for bodily injury and property damage. C. It sets a single maximum limit for both bodily injury and property damage per occurrence. D. It provides unlimited coverage for liability claims. Correct answer: C. It sets a single maximum limit for both bodily injury and property damage per occurrence. Explanation: a combined single limit, CSL, policy provides one total limit for liability claims that can cover both bodily injury and property damage in any combination. This contrasts with split limits, which set different caps for each type of coverage. Source: NY Auto and Liability Insurance Standards. Question 29. In an insurance contract, an exclusion is A. A provision that broadens the scope of coverage, B. A clause that specifies who is covered under the policy, C. A list of perils or situations that are not covered by the policy, D. A mandatory deductible amount to be paid by the insured. Correct answer: C. A list of perils or situations that are not covered by the policy. Explanation: exclusions in an insurance policy outline the specific perils, risks, or situations that are not covered. They help clarify the extent of coverage and prevent disputes over claims involving excluded circumstances. Source: NY Insurance Policy Exclusion Clauses. Question 30. In New York, personal injury protection, PIP coverage under auto insurance, A. only covers liability for bodily injuries to other drivers. B. Pays for medical expenses, lost wages, and other costs regardless of fault. C. Is optional and only recommended for high-risk drivers. D. Covers damages caused by uninsured motorists. Correct answer: B. Pays for medical expenses, lost wages, and other costs regardless of fault. Explanation. Personal injury protection, PIP, is mandatory in New York and covers medical expenses, lost wages, and certain other expenses for the policyholder and passengers, regardless of who caused the accident. This type of no-fault coverage ensures quick access to funds for necessary expenses. Source: NY No-Fault Auto Insurance Laws. Question 31. Which of the following is true regarding replacement cost coverage in a homeowner's insurance policy? A. It pays for the value of the property after depreciation is subtracted. B. It provides funds to replace or repair the property at current market value without considering depreciation. C. It covers only the original purchase price of the property. D. It guarantees a profit if the property value has increased since purchase. Correct answer: B. It provides funds to replace or repair the property at current market value without considering depreciation. Explanation. Replacement cost coverage ensures that if the insured property is damaged or destroyed, the policyholder will receive the necessary funds to repair or replace it at today's prices without accounting for depreciation. This type of coverage helps maintain the original quality and utility of the property. Source: NY Homeowners Insurance Guidelines. Question 32. Subrogation in the context of insurance means A. The process of an insurer transferring a policy to another company. B. The insured paying for services upfront and seeking reimbursement later. C. The insurance company's right to pursue a third party for damages after paying a claim. D. A cause that excludes certain perils from coverage. Correct answer: C. The insurance company's right to pursue a third party for damages after paying a claim. Explanation. Subrogation allows the insurer to seek reimbursement from a third party responsible for a loss after compensating the policyholder. This process helps the insurer recover the costs associated with the claim and can benefit the policyholder by helping to keep insurance premiums manageable. Source: NY Insurance Subrogation Practices. Question 33. In New York, an insurance binder is best described as A. temporary policy issued while waiting for permanent coverage. B. A clause that ensures a policy cannot be canceled. C. A legal agreement to pay future premiums in advance. D. An exclusion of liability coverage under a policy. Correct answer: A. The temporary policy issued while waiting for permanent coverage. Explanation. An insurance binder provides temporary coverage that lasts until the official insurance policy is issued. It serves as proof of insurance and includes essential terms such as coverage type, policyholder information, and limits. Source: NY Insurance Binders Overview. Question 34. Coinsurance in a property insurance policy generally refers to A. The requirement to split premium payments into smaller, affordable amounts. B. The insured's obligation to carry a specified amount of insurance to avoid penalties. C. A co-owner shared responsibility for insurance payments. D. A policy provision where the insurer covers losses only after the deductible is met. Correct answer: B. The insured's obligation to carry a specified amount of insurance to avoid penalties. Explanation. Coinsurance requires policyholders to insure their property up to a certain percentage of its value, usually 80% or more. If this condition is not met at the time of a loss, the policyholder may be subject to a penalty and receive less than the full amount of the claim. Source: NY Property Insurance Coinsurance Clauses. Question 35. Incontestability clause in life insurance policies means A. The policy can be contested at any time by the insurer. B. The policyholder cannot cancel the policy for any reason. C. After a certain period, the insurer cannot void the policy due to misstatements by the insured. D. The policy provides coverage only after a set waiting period. Correct answer: C. After a certain period, the insurer cannot void the policy due to misstatements by the insured. Explanation. An incontestability clause ensures that after the policy has been in force for a specified period, usually 2 years, the insurer cannot cancel or contest it due to misrepresentations made by the policyholder at the time of application, except in cases of fraud. Source: NY Life Insurance Provisions. Question 36. What is the purpose of comprehensive coverage in auto insurance? A. To cover medical expenses for passengers in the insured vehicle. B. To protect against collisions with other vehicles. C. To cover damages to the vehicle not caused by a collision such as theft or natural disasters. D. To provide coverage for property damage liability. Correct answer. C. To cover damages to the vehicle not caused by a collision such as theft or natural disasters. Explanation. Comprehensive coverage pays for damages to the insured vehicle that result from incidents other than collisions, such as vandalism, natural disasters, or theft. It complements collision coverage to provide broader protection. Source: NY Auto Insurance Comprehensive Coverage Details. Question 37. In New York, the assigned risk pool for auto insurance is designed for A. High-income drivers who need specialized coverage. B. New drivers who have never owned a car before. C. Drivers unable to obtain insurance through the regular market due to their high-risk status. D. Policyholders looking for a lower deductible option. Correct answer. C. Drivers unable to obtain insurance through the regular market due to their high-risk status. Explanation. The assigned risk pool is a mechanism set up by the state to ensure that high-risk drivers, who may not be able to find coverage in the standard market, can still obtain mandatory auto insurance. Insurers share the responsibility for covering these drivers. Source: NY Auto Insurance Assigned Risk Pool Overview. Question 38. What does residual market refer to in insurance? A. The type of private insurance with customized benefits. B. Government-sponsored programs for low-income individuals. C. A market where insurers provide policies to individuals who cannot get insurance in the regular market. D. A secondary marketplace for selling expired insurance policies. Correct answer. C. A market where insurers provide policies to individuals who cannot get insurance in the regular market. Explanation. The residual market is established to provide insurance coverage to individuals or businesses that are unable to secure it in the open, competitive market due to factors like high risk. This ensures coverage availability for those who would otherwise be uninsured. Source: NY Insurance Residual Market Programs. Question 39. A scheduled personal property endorsement in a homeowner's policy. It increases the total value covered under the base policy without specification. B. Provides additional liability protection for high-risk properties. C. Covers specific high-value items for their full value beyond standard limits. D. Reduces the premium by limiting coverage on personal property. Correct answer. C. Covers specific high-value items for their full value beyond standard limits. Explanation. A scheduled personal property endorsement allows policyholders to list high-value items separately on their policy to ensure that they are insured for their full appraised value. This endorsement is often used for valuable items like jewelry, art, or collectibles. Source: NY Homeowners Insurance Add-ons. Question 40. In New York, underwriting is best defined as A. The process of reviewing and settling insurance claims. B. Determining the price of insurance premiums by analyzing competitive market rates. C. The process by which insurers evaluate risk and decide whether to issue a policy. D. The policyholder's responsibility to disclose all health information to the insurer. Correct answer. C. The process by which insurers evaluate risk and decide whether to issue a policy. Explanation. Underwriting is the process insurers use to assess the risk of insuring a particular individual or asset. It involves reviewing applications, evaluating data, and making decisions about coverage terms and premium rates. Source: NY Insurance Underwriting Standards. Question 41. In New York, the grace period for paying a premium on a life insurance policy is typically A. 7 days, B. 15 days, C. 30 days, D. 60 days. Correct answer. C. 30 days. Explanation. A grace period is the time after the premium due date during which a policyholder can make a payment without losing coverage. In New York, most life insurance policies provide a 30-day grace period to ensure the policy remains active. Source: NY Life Insurance Policy Guidelines. Question 42. Which of the following describes an umbrella insurance policy? A. A policy that only covers damage from weather-related events. B. A supplemental policy providing additional liability coverage above standard policies. C. A type of homeowner's policy that includes flood insurance. D. A basic car insurance policy. Correct answer. B. A supplemental policy providing additional liability coverage above standard policies. Explanation. An umbrella insurance policy offers extra liability coverage beyond the limits of the insured's existing home, auto, or other policies. It is designed to protect against significant claims and lawsuits. Source: NY Umbrella Insurance Policy Details. Question 43. In insurance, the term peril refers to A. The value of a property before damage occurs. B. The likelihood of an event that could cause damage. C. The cause of a loss or damage covered by a policy. D. A type of deductible applied to specific claims. Correct answer. C. The cause of a loss or damage covered by a policy. Explanation. A peril is an event or occurrence that can cause a loss such as fire, theft, or a natural disaster. Insurance policies outline which perils are covered and which are excluded. Source: NY Property Insurance Definitions. Question 44. A claims-made policy and liability insurance. A. Covers any claim made during the policy period regardless of when the incident occurred. B. Covers claims for incidents that occur while the policy is active even if reported later. C. Requires the incident and the claim to both happen during the policy term. D. Automatically includes coverage for prior acts. Correct answer. It covers any claim made during the policy period regardless of when the incident occurred. Explanation. A claims-made policy covers claims that are made while the policy is in force regardless of when the actual event causing the claim occurred, provided it happened after the policy's retroactive date. Source: NY Liability Insurance Overview. Question 45. What is an endorsement in insurance terminology? A. The removal of coverage from a policy. B. An agreement between two insurance companies. C. A written document that modifies the terms of an existing insurance policy. D. A temporary policy until permanent coverage is secured. Correct answer. C. A written document that modifies the terms of an existing insurance policy. Explanation. An endorsement, also known as a rider, amends an insurance policy to either add or change coverage, terms, or conditions. It allows policy customization based on the insured's specific needs. Source: NY Insurance Endorsements Explain. Question 46. In New York, personal injury protection, PIP, is included in A. Homeowner's insurance. B. Health insurance. C. Auto insurance. D. Life insurance. Correct answer. C. Auto insurance. Explanation. Personal injury protection, PIP, is part of New York's no-fault auto insurance system. It covers medical expenses, lost wages, and other damages regardless of who is at fault in an accident. Source: NY Auto Insurance PIP coverage. Question 47. The term actuarial in insurance primarily relates to A. The legal department that manages policyholder complaints. B. The statistical analysis used to calculate premiums and assess risk. C. A method of collecting past due premiums. D. The department responsible for processing claims. Correct answer. B. The statistical analysis used to calculate premiums and assess risk. Explanation. Actuarial work involves using mathematics, statistics, and financial theory to study and predict risk, which helps insurance companies determine appropriate premiums and policy structures. Source: NY Insurance Actuarial Rules. Question 48. In New York, no-fault insurance means A. Each driver is responsible for their own damages, regardless of fault. B. Insurance claims can only be made if both parties agree on fault. C. The driver at fault must cover the damages of both parties. D. Only property damage is covered without determining fault. Correct answer. A. Each driver is responsible for their own damages, regardless of fault. Explanation. New York's no-fault insurance system ensures that each driver's insurance policy covers their medical expenses and related damages, regardless of who is at fault in an accident. Source: NY no-fault insurance law. Question 49. Which type of policy typically includes a deductible? A. Life insurance. B. Disability insurance. C. Property insurance. D. Travel insurance. Correct answer: C. Property insurance. Explanation: a deductible is the amount the policyholder must pay out of pocket before the insurance company covers the remaining costs of a claim. Property insurance policies, such as homeowners and auto insurance, commonly include deductibles. Source: NY Insurance Deductibles Overview. Question 50. The indemnity principle in insurance means A. The insurer will always pay the full amount of the policy coverage. B. The insured cannot profit from a claim and is compensated only for the actual loss. C. The policyholder can set the claim amount. D. The policy guarantees coverage even if premiums are unpaid. Correct answer: B. The insured cannot profit from a claim and is compensated only for the actual loss. Explanation: the indemnity principle ensures that insurance policies are designed to restore the insured to their pre-loss financial state without resulting in a profit. This principle supports fair compensation while preventing unjust enrichment. Source: NY Insurance Principles. Question 51. Which of the following is an example of a moral hazard in insurance? A. A house being located in a flood zone. B. A person being careless with their property because they have insurance coverage. C. A property being susceptible to natural disasters. D. An increase in the market value of a property. Correct answer: B. A person being careless with their property because they have insurance coverage. Explanation: a moral hazard occurs when the behavior of the insured changes as a result of having insurance, such as being less careful because they know potential damages will be covered. Source: Insurance hazard types explain. Question 52. In insurance terminology, the loss ratio is A. The ratio of the policy's premium to the total value of the insured property. B. The ratio of incurred claims to the earned premiums. C. The percentage of policies canceled within a year. D. The difference between actual and estimated losses. Correct answer: B. The ratio of incurred claims to the earned premiums. Explanation: the loss ratio is a key metric that indicates the profitability of an insurance policy. It's calculated by dividing the total incurred claims by the total earned premiums, showing how much of the premium is being used to pay claims. Source: NY Insurance Loss Ratio Definitions. Question 53. What is a replacement cost in property insurance? A. The cost to rebuild or replace a property after depreciation is deducted. B. The amount of money an insurance company pays regardless of current prices. C. The cost to replace the damaged property without deduction for depreciation. D. The total market value of the property at the time of purchase. Correct answer: C. The cost to replace the damaged property without deduction for depreciation. Explanation: replacement cost refers to the amount it would take to replace or rebuild the insured property at current prices without considering depreciation, ensuring full restoration. Source: NY Replacement Cost Coverage explained. Question 54. A binder in insurances. A. A formal contract that outlines long-term coverage. B. A temporary contract that provides immediate insurance coverage until a policy is issued. C. A document showing a policyholder's payment history. D. A clause that restricts certain types of coverage. Correct answer: B. A temporary contract that provides immediate insurance coverage until a policy is issued. Explanation: a binder is a temporary agreement that provides proof of insurance coverage while the actual policy is being processed. It ensures that the policyholder is protected in the interim period. Source: Insurance Binder Overview. Question 55. In New York, workers' compensation insurance is mandatory for A. Self-employed individuals. B. Part-time employees only. C. All employees, including part-time and seasonal workers. D. Volunteers for nonprofit organizations. Correct answer. C. All employees, including part-time and seasonal workers. Explanation. Workers' compensation insurance is required in New York for most employers to cover all employees, including part-time and seasonal workers, to ensure protection for work-related injuries or illnesses. Source: NY Workers' Compensation Regulations. Question 56. The term underwriting in insurance refers to A. The process of paying out claims. B. The method of filing a claim. C. The process of evaluating risk in determining policy terms. D. The calculation of the policyholder's deductible. Correct answer. C. The process of evaluating risk in determining policy terms. Explanation. Underwriting is the process through which insurers assess the risk associated with a potential policyholder and determine appropriate coverage terms and premiums. Source: Insurance underwriting process explained. Question 57. Which of the following best defines coinsurance and property insurance? A. The sharing of insurance coverage between two different insurers. B. The splitting of premiums between the policyholder and the insurer. C. A clause that requires the policyholder to insure a certain percentage of the property's value. D. A policy that covers two properties under one plan. Correct answer. C. A clause that requires the policyholder to insure a certain percentage of the property's value. Explanation. Coinsurance is a provision in property insurance that requires the insured to carry insurance equal to a specified percentage of the property value. Failure to do so may result in reduced claim payments. Source: NY Coinsurance Clause details. Question 58. What is the main function of a reinsurance company? A. To provide individual policyholders with supplementary coverage. B. To issue direct policies to the public. C. To insure insurance companies against their own risks. D. To handle policy renewals for primary insurers. Correct answer. C. To insure insurance companies against their own risks. Explanation. A reinsurance company provides insurance for other insurance companies, allowing them to manage risk by spreading potential liabilities more broadly. Source: NY Reinsurance Fundamentals. Question 59. The principle of subrogation allows an insurer to A. Pay a claim in installments. B. Reclaim expenses from a third party after compensating the insured. C. Deny claims involving negligence. D. Raise premiums without notice. Correct answer. B. Reclaim expenses from a third party after compensating the insured. Explanation. Subrogation enables the insurer to recover the cost of a claim from a third party responsible for the loss. This ensures that the party at fault ultimately bears the financial responsibility. Source: NY Insurance Subrogation Rules. Question 60. In a life insurance policy, the beneficiary is A. The insurance company that issues the policy. B. The person or entity that receives the policy's proceeds upon the policyholder's death. C. The policyholder who makes premium payments. D. The underwriter who assessed the risk. Correct answer. B. The person or entity that receives the policy's proceeds upon the policyholder's death. Explanation. A beneficiary is the individual or entity designated by the policyholder to receive the death benefit from a life insurance policy when the policyholder passes away. Source: NY Life Insurance Beneficiary Details. Question 61. Which of the following is considered liability insurance? A. Coverage for damages to the insured's own home. B. Coverage that protects the insured against third-party claims. C. Insurance that reimburses for property theft. D. Insurance that covers the insured's medical expenses. Correct answer. B. Coverage that protects the insured against third-party claims. Explanation. Liability insurance protects the insured from claims made by third parties for damages or injuries for which the insured is legally responsible. It does not cover the insured's own property. Source: General Liability Insurance Overview. Question 62. A deductible in an insurance policy is best described as A. The total amount the insurer will pay in a year. B. The amount the policyholder must pay out of pocket before the insurer pays for a covered loss. C. The premium paid by the policyholder. D. The cost of the policy renewal. Correct answer. B. The amount the policyholder must pay out of pocket before the insurer pays for a covered loss. Explanation. The deductible is a specified amount subtracted from the claim payment. It represents the part of the loss that the insured must cover before insurance kicks in. Source. Insurance deductibles explain. Question 63. What does the declarations page of an insurance policy include? A. The procedure for filing claims. B. A list of all exclusions. C. Basic information about the insured coverage and policy limits. D. Details of state-specific regulations. Correct answer. C. Basic information about the insured coverage and policy limits. Explanation. The declarations page provides key information such as the policyholder's name, address, coverage details, policy limits, and effective dates. It serves as a summary of the policy source. Insurance declarations page details. Question 64. An endorsement in insurances. A. A requirement for policy renewal. B. An optional rider that cancels a policy. C. A modification or addition to an existing policy. D. The policyholder's obligation to pay premiums. Correct answer. C. A modification or addition to an existing policy. Explanation. Endorsements are amendments to an insurance policy that modify its terms or coverage. They can add or exclude specific coverage or conditions. Source. Insurance policy endorsement explained. Question 65. What does actual cash value, ACV, mean in property insurance? A. The original purchase price of the property. B. The replacement cost of the property minus depreciation. C. The future value of the property. D. The appraisal value set by an insurance adjuster. Correct answer. B. The replacement cost of the property minus depreciation. Explanation. Actual cash value refers to the cost to replace the property, adjusted for depreciation. It ensures that the policyholder receives compensation that reflects the current value of the damaged property. Source. ACV in property insurance. Question 66. Peril in insurance terms is defined as A. The risk management practices of the insurer. B. An increase in the insured value of a property. C. A specific cause of loss or damage covered by the policy. D. The premium charged by the insurer. Correct answer. C. A specific cause of loss or damage covered by the policy. Explanation. A peril is a specific event, such as fire or theft, that causes damage or loss. Policies typically list covered perils and any exclusions. Source. Insurance perils defined. Question 67. Negligence and liability insurance is best described as A. An unavoidable accident. B. The failure to exercise the care that a reasonable person would exercise in similar circumstances. C. A claim that is rejected by the insurer. D. Intentional damage caused by the policyholder. Correct answer. B. The failure to exercise the care that a reasonable person would exercise in similar circumstances. Explanation. Negligence refers to the lack of proper care or action, which results in damage or injury to another party. It is a fundamental concept in liability insurance claims. Source. Negligence and liability insurance. Question 68. What is inland marine insurance used for? A. Covering property transported over water. B. Insuring properties located within 50 miles of a body of water. C. Protecting property that is in transit over land or movable. D. Providing flood insurance coverage. Correct answer. C. Protecting property that is in transit over land or movable. Explanation. Inland marine insurance covers property that is being transported or is mobile, including equipment and valuable items not at a fixed location. Source. Inland marine insurance overview. Question 69. Commercial general liability (CGL) insurance primarily covers A. Damages to the business owner's property. B. Claims arising from business operations causing bodily injury or property damage to others. C. Financial losses due to market fluctuations. D. Employee injuries at the workplace. Correct answer. B. Claims arising from business operations causing bodily injury or property damage to others. Explanation. CGL insurance protects businesses from financial loss due to liability claims for bodily injury, property damage, and other risks related to their operations. Source. CGL Insurance explain. Question 70. What is the primary purpose of an umbrella insurance policy? A. To replace basic liability insurance. B. To provide coverage for the primary residence only. C. To provide excess liability coverage above and beyond standard policy limits. D. To insure personal belongings. Correct answer. C. To provide excess liability coverage above and beyond standard policy limits. Explanation. An umbrella insurance policy offers additional liability protection that exceeds the limits of the insured's underlying policies. It is useful for covering significant claims and legal expenses. Source. Umbrella insurance details. Question 71. Which type of policy is specifically designed to cover losses from theft and dishonesty by employees? A. Professional liability insurance. B. Workers' compensation insurance. C. Fidelity bond. D. Business owner's policy. Correct answer. C. Fidelity bond. Explanation. A fidelity bond is an insurance product that provides coverage for losses incurred due to fraudulent acts or dishonesty committed by employees. It protects businesses against embezzlement, theft, and other dishonest acts. Source. Fidelity bond explanation. Question 72. In property insurance, what is meant by the term coinsurance? A. A policy shared between two insurers. B. A clause that requires the insured to pay a portion of the claim. C. A mandatory insurance limit for certain types of property. D. A premium discount for multi-policy holders. Correct answer. B. A clause that requires the insured to pay a portion of the claim. Explanation. Coinsurance is a clause that requires the policyholder to maintain insurance coverage equal to a specified percentage of the property value. If this condition isn't met, the policyholder may share the cost of a claim. Source. Coinsurance and insurance. Question 73. Which of the following is not typically covered under a standard homeowner's policy? A. Fire damage. B. Theft of personal property. C. Earthquake damage. D. Vandalism. Correct answer. C. Earthquake damage. Explanation. Standard homeowners insurance policies do not usually cover damage caused by earthquakes. Separate earthquake insurance must be purchased to cover these events. Source. Homeowners insurance coverage. Question 74. What is the main function of underwriting in insurance? A. Selling insurance policies to customers. B. Assessing and determining the risks of insuring a client. C. Handling claims processing. D. Renewing policies annually. Correct answer. B. Assessing and determining the risks of insuring a client. Explanation. Underwriting is the process by which insurers evaluate the risk of insuring a person or entity and decide on the terms and premium for the policy. Source. Insurance underwriting process. Question 75. A loss payable clause in an insurance policy benefits A. The primary policyholder only. B. The insurance company. C. The lien holder or lender with a financial interest in the insured property. D. The insured's legal representative. Correct answer. C. The lien holder or lender with a financial interest in the insured property. Explanation. A loss payable clause ensures that the lender or entity with a financial interest in the property receives payment for any claims related to the insured property. Source. Loss payable clause details. Question 76. What does replacement cost coverage mean in a property insurance policy? A. The cost to rebuild a property as it was originally. B. The cost minus depreciation to repair or replace damaged property. C. The cash value of the property when it was first purchased. D. The total amount that the policyholder paid for the property. Correct answer. A. The cost to rebuild a property as it was originally. Explanation. Replacement cost coverage reimburses the policyholder for the cost of repairing or replacing damaged property without factoring in depreciation. Source. Replacement cost explained. Question 77. What type of insurance policy provides liability coverage specifically for individuals acting as directors or officers of a company? A. General liability insurance. B. Professional indemnity insurance. C. Directors and officers DO liability insurance. D. Business interruption insurance. Correct answer. C. Directors and officers DO liability insurance. Explanation. DO liability insurance protects individuals who serve as directors or officers of a company against personal losses if they are sued for alleged wrongful acts in their management roles. Source. DO insurance overview. Question 78. In the context of insurance, what does the term subrogation mean? A. The insurer's right to collect a deductible. B. The process of determining policy limits. C. The transfer of the insured's rights to the insurer after a claim is paid. D. The requirement for policy renewal. Correct answer. C. The transfer of the insured's rights to the insurer after a claim is paid. Explanation. Subrogation allows the insurer to take over the policyholder's rights to pursue recovery from a third party responsible for the loss after the claim has been paid. Source. Subrogation definition in insurance. Question 79. Which of the following is a named peril policy? A. A policy that only lists the hazards covered. B. A policy that covers any risk not explicitly excluded. C. A policy that provides blanket coverage for all types of risks. D. A policy that offers full replacement cost. Correct answer. A. A policy that only lists the hazards covered. Explanation. A named peril policy covers only the specific perils explicitly listed in the policy document, unlike an all-risk policy that covers everything not excluded. Source. Named peril insurance policies. Question 80. The appraisal clause in a property insurance policy is used when A. The policyholder disputes the deductible amount. B. There is a disagreement over the value of the loss. C. The policyholder wants to increase coverage limits. D. The insurer changes the terms of the policy. Correct answer. B. There is a disagreement over the value of the loss. Explanation. The appraisal clause allows the policyholder and the insurer to each hire an independent appraiser if they cannot agree on the value of a loss. A neutral umpire may be chosen if the appraisers disagree. Source. Insurance appraisal clause details. Question 81. What type of insurance covers damage or injury caused by a product sold by a business? A. Commercial auto insurance. B. Product liability insurance. C. Workers' compensation insurance. D. Umbrella insurance. Correct answer. B. Product liability insurance. Explanation. Product liability insurance provides coverage for damages or injuries caused by products a business manufactures or sells. This protects businesses from legal claims and financial loss due to product defects. Source. Product liability coverage overview. Question 82. In an insurance policy, what is an endorsement? A. A clause that excludes certain perils from coverage. B. An addendum that modifies or adds to the original policy. C. A refund given to the policyholder. D. The cancellation of an insurance policy. Correct answer. B. An addendum that modifies or adds to the original policy. Explanation. An endorsement is an amendment or addition to an existing insurance policy that changes the terms or coverage. It can be used to add, modify, or remove coverage. Source. Insurance endorsement details. Question 83. What is the purpose of a declaration page in an insurance policy? A. To list the claims history of the insured. B. To provide a summary of coverage, limits, and insured information. C. To outline the exclusions in the policy. D. To state the policyholder's payment schedule. Correct answer. B. To provide a summary of coverage, limits, and insured information. Explanation. The declaration page is a part of the insurance policy that provides key details such as the name of the insured, policy number, coverage limits, and the period of coverage. Source. Declaration page explanation. Question 84. Which of the following is true about actual cash value, ACV, in property insurance? A. It represents the cost of replacing the item without considering depreciation. B. It represents the market value at the time of the loss. C. It is calculated as replacement cost minus depreciation. D. It is higher than the replacement cost value. Correct answer. C. It is calculated as replacement cost minus depreciation. Explanation. Actual cash value, CV, is the cost of replacing an item at the time of loss minus any depreciation due to age or wear and tear source. ACV definition in insurance. Question 85. What type of policy covers a company when a third party sues them for negligence resulting in bodily injury or property damage? A. Professional liability insurance. B. General liability insurance. C. Property insurance. D. Business interruption insurance. Correct answer. B. General liability insurance. Explanation. General liability insurance protects businesses against claims of bodily injury or property damage that result from their operations, products, or services source. General liability insurance overview. Question 86. Which of the following describes a non-renewal of an insurance policy, a cancellation initiated by the insurer midterm? B. The automatic renewal of the policy for the next term. C. The insurer's decision not to renew coverage after the policy term ends. D. The policyholder's request for coverage suspension. Correct answer. C. The insurer's decision not to renew coverage after the policy term ends. Explanation. Non-renewal refers to an insurer's choice not to renew a policy after its expiration. This can occur for various reasons, such as risk reassessment or policy changes. Source. Non-renewal of insurance policies. Question 87. What is business interruption insurance designed to cover? A. Legal expenses from lawsuits against the business. B. Financial losses when business operations are temporarily halted due to a covered event. C. Damage to the business property from natural disasters. D. Theft of business assets. Correct answer. B. Financial losses when business operations are temporarily halted due to a covered event. Explanation. Business interruption insurance compensates businesses for lost income and operating expenses if they are unable to operate due to a covered event like a fire or natural disaster source. Business interruption coverage explained. Question 88. A scheduled personal property endorsement is used for A. Increasing the coverage amount of an entire home. B. Adding liability coverage for business activities. C. Providing specific coverage for valuable personal items. D. Lowering the deductible for certain perils. Correct answer. C. Providing specific coverage for valuable personal items. Explanation. This type of endorsement allows policyholders to list specific items such as jewelry or art and insure them for a set amount that reflects their appraised value. Source. Scheduled personal property overview. Question 89. What type of insurance policy includes a coinsurance clause that requires policyholders to insure at least 80% of the property value? A. Liability insurance. B. Life insurance. C. Property insurance. D. Auto insurance. Correct answer. C. Property insurance. Explanation. Many property insurance policies have a coinsurance clause that mandates the policyholder insure the property for a certain percentage of its value, typically 80% or more, to receive full reimbursement for a claim. Source. Coinsurance and property insurance. Question 90. What is the primary function of reinsurance in the insurance industry? A. To provide additional coverage options for consumers. B. To offer insurance agents better commissions. C. To allow insurance companies to spread risk among other insurers. D. To help insured parties receive faster claim settlements. Correct answer. C. To allow insurance companies to spread risk among other insurers. Explanation. Reinsurance is when one insurance company purchases insurance from another to manage the risk associated with large claims or large numbers of claims. This helps them avoid significant financial losses. Source. Reinsurance explained.